and offer some stock ideas for tomorrow morning. For that, let's start with Navneet.
Hi Nikunj, Sun Pharma is looking good. In fact, some of the analysts are saying that the stock is placed very well compared to its peers. Its valuations are also looking good, and it's the most leveraged company in the sector. If you look at the counter, it focuses on chronic products where the competition is limited, and also the company's growing presence in the complex product in the market of US could augur well for the company. If you look at the Bloomberg poll, almost 56% of the analysts have a buy rating on Sun Pharma, and looking at the counter, it's given return of almost 25% on year-to-date basis, and it's currently trading above its 200-day moving average.
Dipin, in this current environment, where are you putting money to work?
As I said, I think we are in a bit of wait and watch mode at this point of time, given that the earnings season is just around the corner, and you don't want to get trapped if the company you are investing in suddenly comes up with a poor set of numbers. So we just like to wait and see the numbers of the companies and then take an investment call. But as I had said earlier, I think our preference is clearly for the export-oriented stocks, IT, pharma, and I think some of the private sector banks could be a good trading pick also at this point of time, given that the numbers would be quite interesting and they could enthuse the markets. So these are the two sectors you'd like to be overweight on. But as I said, that it's just wait and watch. You could get opportunities at even lower levels, or if the company comes out with a very decent set of numbers, then trying to bid it up and buy a slightly higher price also will not be a bad idea.
Dipin, why is that you're not hot on infra names? Because that's where the real value is, that's where the real opportunity is.
Yeah, but that's also where a lot of uncertainty is, and at this point of time, I think we are still in the mood to try and protect the capital and not take additional risk. And there are enough opportunities for PE expansion as well as EPS growth in some other sectors which I just spoke about. And infrastructure, still remains a bit of a gamble given the situation we are in, and there's no real headway made or no real fundamental change in the industry per se. Sure, L&T have got a few more orders, but on the whole, I think the industry is still quite challenged. So I'd like to just wait and watch, and then take a call once we know that the recovery is underway.
Navneet, which is the second stock on your list?
Well, Nikunj, watch out for Specialty Restaurants. It's a small cap company with a market cap of almost 1,000 crore. It's a new entrant in the capital markets. This company was listed on May 30th with an issue price of almost 152. If you look at the return, it's given return of almost 38% since listing, and its main brand, which is mainland China, contributes to 50% of its revenue. Well, we've heard that there could be some fund buying coming in there in this particular counter, so watch out for that. And looking at the counter, it's currently testing its 20-day moving average.
Dipin, which is one consumption stock, mid cap or large cap, you're bullish on and you would like to buy that stock or that business on a 10% decline?
Well, with the usual disclosure that we have invested and recommended, I think maybe not the two sectors, that's private sector banks and pharma or IT, but a media stock for a change. And Eros International to us looks quite interesting. It's a new listing, but now that we investors have seen what kind of returns are delivered by UTV and at what valuation it was bought, we do feel that Eros International is quite undervalued. There's a secular growth story over there, and the slate looks quite interesting, as well as in terms of the number of releases is quite interesting. And company is well capitalized, and its position in the industry is pretty strong, which means that proposals will keep on coming to it. And the entire business model is to an extent de-risked, and we do feel that the company could deliver at least 25-30% kind of top line and maybe 20%-25% kind of bottom line growth for next 2-3 years. And valuations also quite attractive at around 17-18 times or thereabout, trading 12 months. So that's one sector, or rather one company we'd look at buying at declines. But being a new company and the industry the way it is in, there could be certain issues in terms of the corporate governance standards or the quality of disclosure, or there could be volatility in earnings as well. So these are the risk factors. But I think that investing is all about taking a bit of a risk, and I think investors could look at Eros International. Usual disclosure, we have investments and recommendation in that stock.